The Telegraph's economics correspondent Lizzie Burden reports.
Does the furlough scheme need to be more flexible? That's the complaint levelled at the coronavirus job retention scheme by business groups and think tanks today. They say instead of only some of the workforce being able to work all the time, all the workforce should be able to work some of the time, where possible. I was watching the Treasury Select Committee and the MP for South Cambridgeshire was talking about an agricultural company in his constituency that had to furlough all its staff because they were all so specialised that they all needed to be there together, even if reduced demand because of corona meant they didn't all need to be there as long. Now, a lot of the groups calling for this shift to short-time work say the move would make the scheme cheaper for the taxpayer, but accept that actually the government did a pretty good job of getting the furlough scheme up and running quickly, and inevitably that meant that it would have some policy design flaws. So maybe it's not fair to compare with Germany, for example, which already had a short-time work system set up in 1910 to help with its mining industry. But Sweden's also set up its scheme really neatly so that workers' hours can be cut by 20, 40, 60 or 80%, and the government top-up is then cut accordingly. So the hope of groups like Reform and the CIPD is that the government will now adapt the scheme, just like it did to accommodate self-employed workers, to help the economy gradually get back on its feet, because the economy clearly won't be as easy to switch on as it was to switch off.
Lizzie Burden is the Telegraph's economics correspondent.
Well, it was clear who the Chancellor was modelling himself on today. He announced a raft of new measures on top of what he'd already promised in the budget to tackle the economic impact of the coronavirus. And he kept repeating that he'd do whatever it takes, which was exactly what the former European Central Bank President Mario Draghi had said when he intervened to stop the collapse of the euro back in 2012. So what was behind those three words? Well, Rishi Sunak announced £330 billion in guarantees for businesses, as well as a business rates holiday for a year for all businesses in the retail, hospitality and leisure sectors. And we know that they're really up against it because people are staying at home. So it's not for all businesses, as many people had hoped, but it will make a big difference there. The Chancellor also announced a new lending facility with the Bank of England. He said that businesses would be given attractive terms, but there wasn't much detail on what those terms would be or how businesses would be expected to pay back the loans, given that many economists are now predicting a global recession. So the question is whether many of those businesses will even still be in existence to pay the loans back. But to put the package in perspective, Donald Trump this afternoon announced that his administration was going to go big with an $850 billion spending plan. And he said that he's even considering helicopter money, so putting $1,000 checks through people's letterboxes. But interestingly, as a share of GDP, Rishi's package is bigger than Donald's. So there are still some big questions for the Chancellor. What about employment support? What about renters? What about airlines and airports? But it seems that the answers are going to be dripped out at the daily press conferences over the coming days.